Welcome, everyone. We're going to wait a couple more minutes. I think we still have some people signing on. Just a couple housekeeping things. There is a chat function on the right side of the screen. If you have questions during either of our presentations, just put them in the chat window and we'll be watching those. Also, there's a handouts tab on the far right, and those are copies of all of our slides for tonight. Want to give it a couple more minutes, Randy?
Yeah, let's give it a couple more minutes and see. We're getting a few tail enders joining in. So. And for everybody's viewing pleasure, once you start, I will shut my camera off. So.
But thank you for everyone for showing up tonight. We knew if we did this in the afternoon, no one would have been on today. What did we shatter the Fargo record by?
I saw it. I didn't see 50, but I saw 49, I think it was. So that's 5 degrees, I think it was, that we beat it by. And it's still, my computer's still saying 36 degrees and clear here. So it's still really nice.
Strange.
For the last day of January, compared to last year. So. Well, I suppose the only way we can get done is to start. So.
Start. Okay, I will start. Just like you guys are used to these, I'm going to talk about the crop insurance changes for this year. There aren't a lot of them. Then Rand's going to talk about the markets. Tonight, we're going to be focusing on the grains. Next Wednesday, we're doing the same thing again, except we'll be focusing on cattle. So if you have cattle, make a note of that for next week. Just a couple starting things. We did do a lot of revisions to our website about a year ago, and we're trying to organize the information out there better. So under crop insurance, we have a resources tab, and the main crop insurance screen will be, recent crop insurance recent crop insurance information, such as the dry bean and dry pea harvest prices that came out January 15th. On the marketing side, the FYI is going to be the most recent posts either for crop insurance or marketing. And then we'll have a presentations slot, and that's where this will go. This is being recorded. We will post this tomorrow. And we have a separate page for USDA reports. Also, if you haven't seen our mobile app, haven't made many changes to that from last year. It is out there. Everything is free except for the daily comments. It is faster too if you were on it early and it was pretty slow. We have improved that. So if you haven't been out there for a while, check it out. I always start with this slide to start my presentations. This is kind of depressing this year. Of course, tomorrow is February 1. We will start tracking crop insurance projected prices tomorrow throughout the whole month of February. Right now, though, as of today's close, new crop corn was sitting at $4.80. That's about $1 below where we were last year. Soybeans are about $12 today for new crop. It was $13.76 last year. Spring wheat was $8.87 a year ago, and today new crop was sitting at $7.13. So we are going to see some considerably lower prices this year than last year if this keeps tracking in this way. Like I said, we did have the dry bean harvest prices finally came out on January 15th. And so there's the list. Now for 24, we have no way to track these. RMA just publishes them in early March. So we're just kind of left using last year's prices until then. Dry peas, the same thing. And the APH plan, these are the prices that RMA just sets. And they come out earlier. These have been out since January. RMA can raise them anytime before March 15th. For changes this year, like I said, there's not a lot. For the state of North Dakota, really the only change was soybean coverage is now available out in Bowman and Slope counties. Then a lot of this is just review. Remember, we have a lot of different ways we can do enterprise units now. The general enterprise unit is, of course, all your land of that crop in the county. We can also do separate enterprise units by irrigation practice, by type, by cropping practice. And don't forget, we have that multi-county enterprise unit. So if you have your main county and the county next door, you have 1/4 of a section in, you can tie those two together. They'll be together at loss time, but they'll also be together for premium purposes. So that little 1/4 in standing by itself that would have to be a basic unit can now become an enterprise unit and get the same discount as the major county. RMA keeps adding enterprise units. They're now available on these crops. Pretty much everything now has got an enterprise unit. I should have said that on this revenue protection list, you see oats is listed now. Oats is now a revenue product, can have the YPRP, just like everything else, can have enterprise units. And then reminder, especially up here, we can do different enterprise units by type. That is only available on dry beans, dry peas, sunflowers, and wheat. So if you have spring and durum wheat, you could call your spring wheat could be one enterprise unit, your durum could be a separate enterprise unit. Or you could do spring wheat as enterprise, durum as optional. You can kind of mix and match those. This is just review. This gets kind of confusing. We have a lot of rules about how land comes back into your farming practice. The big rule here to keep in mind is land is only considered insurable if it has been planted and harvested in one of the last 3 years. So land coming out of CRP, since that was already in a government program, it's automatically insurable the first year. So what the loophole to that rule. The first year, you're stuck with 100% of the county yield. And then after that, normal rules apply. There's no PP available on year 1. New breaking but previously crop land is not insurable that first year unless you request a written agreement. And most of those have to be done by March 15th. So if you want to insure any new breaking land, you got to let us know sooner than later. In this case, you get 80% of the county yield the first year. And after that, just normal APH rules apply, just like anything else. The nasty one is native sod. Native sod is acreage either that has never been tilled, you're ripping up pasture, or it was tilled 20, 30 years ago and you just can't find proof of it. So RMA has placed penalties on this land. They do not want people tearing up native sod. So the rules are now, there's going to be these native sod penalties until you have insured the crop for 4 years, not just planted it. You can't use cat coverage. If you choose not to insure it, it takes 10 years to get out of that native sod status. And those rules kick in as soon as you have 5 acres across the county, regardless of what crop it's planted to, native sod, these kick in. And they're nasty penalties. And again, if you add 4 or 5 acres to a field, only those native sod acres are penalized. The rest of your land is fine. If you're tearing up 100 acres of pasture, this starts to become more complicated. So until you have those 4 years of insurability, your guarantee will be based on 65% of the county T, 50% of percentage points of subsidy will be taken away. So you're going to have very low coverage with expensive premium. And again, because it has not been planted or harvested in one of the last 3 years, you can choose not to insure it the first year. But if you're trying to get it out of these penalties, you want to insure it that first year. And then again, to get those 4 years of insurability, one way to get around this is if you have a crop you really don't care a lot about, oats or something, take a YP 50% enterprise unit oats policy, plant oats in it for 4 years, get out of those native sod penalties. It's one way to get around it. And we can run premium on that pretty easily to see the difference. I should have mentioned too, we do have a chat on the right side again. If you have any questions, just type them in the chat as we go. We'll be watching that. A couple of other things I want to talk about. This doesn't affect many people, but there's now whole farm revenue protection is the policy that uses the 5 years of your Schedule F history, and it's based on your tax returns. They had a new version of that a year ago. It's called Microfarm. And this is nice if you know anyone who is growing, fruits or vegetables, or they have some vegetables and some cattle, kind of a small farmers that really don't fit into regular crop insurance. Improved revenue has to be $350,000 or less. And you can take other federal crop insurance policies with it. Last year, you could not. I actually have one of these insured. It is a couple that grows vegetables and herbs and flowers, and they sell them to local farmers markets and local grocery stores and restaurants. And so there was really no other way they could get coverage except for this. For this one, you just need 3 years of tax records. Again, your losses are based on your tax records. And what's nice about this is all of your commodities are just dumped into one number. You don't have to spell out that you're going to have a quarter of an acre of pumpkins and go through all that. We have an extra month on this. Sales closing for this is April 15th instead of March 15th. I want to talk about SEO, but to do that, I want to talk about ARC and PLC first. So in the 2018 Farm Bill, they rewrote the rules, and they have a new way of calculating the reference prices. And so we are going to see some increases there. That left column is the statutory reference price that has been around forever. That second column is the new calculated PLC effective price. So you can see corn on PLC goes up from $370 to $401. Soybeans go from $840 to $926. Wheat stays the same at $550. And then on the ARC side, remember ARC takes that county yield times the price and then takes it times 86%. So that far right column is comparing apples to apples. So corn and soybeans are still going to see a higher price on ARC. Wheat actually is lower now on ARC than PLC, but it's pretty unlikely that's going to trigger a loss either way. At least with corn and soybeans, if the county does have a bad year, you could get a loss based on that. And why that ties in is when we talk about SEO, it's just another coverage you can put on your policy. It's another federally programmed, subsidized. This goes from where your revenue protection or yield protection policy stops up to 86%. Your SEO has to be with the same company as your underlying policy. And this one is kind of a strange combo. Your liability per acre, your guarantee, is based on your own APH for that section. However, whether you have a loss or not depends on how the county yield turns out. And we'll go through some examples. Like I said, if you have ARC and FSA, you cannot use SEO. So again, those decisions have to be made at March 15th also at FSA. So you do those in parallel. You can kind of mix and match them. We just need to know any farm numbers that have ARC at acreage reporting time. We have to note that and say they don't qualify for SEO. ECO goes a step beyond that. Now we're covering really shallow losses. So SEO, let's say you have a 75% RP policy. So the first 75% is covered by the RP, 75 to 86 is covered by SEO, and then you could go higher than that, go 86 to 90 or 86 to 95. Same rules. Liability is based on your own APH, loss payments based on county yield. And on the ECO side, it does not matter what you do at FSA. You can purchase ECO on top of SEO, or you can ignore SEO and just put the ECO on. One downside of this is because it's based on a county final yield, RMA has to get all that data together. So for the crop being planted this spring, we will not see final county yields for like canola and wheat until May of 2025. Corn and soybeans will be out a month later in June of 2025. And there's just a picture of what I just talked about. Your blue is your RP, YP coverage. The yellow is your SCO. Green is your ECO, and that little bit on the top is the deductible. You have no coverage beyond either 90 or 95%. So I went through an example. I'm going back to last year because it makes the loss examples easier because we know what most of those numbers are. So this is an example. This is last year's premium for SCO for Stutsman County corn. Did an approved yield of 165. The price last year was 591. This is based on a 300-acre enterprise unit. And you can see in the middle column that coverage per acre, the numbers in red stay the same, except for some rounding issues, because we're going up to 86% regardless. So in this first one, your 70% is the RP, and the next 16% is SCO. So on the RP side, you've got $683 of coverage for $1,484 an acre. That SCO, because it's covering a more shallow loss, is $156 of coverage that costs you $20 an acre. And as we go on, again, we're still going to 86, so that coverage per acre total stays the same. But as we go up, the SCO part gets smaller and cheaper because, again, your RP is covering more of that amount up to 86, I mean. So I did some examples. This is kind of confusing until you start trying to work through some examples on it. So I'm going back to last year. So last year, we know the spring price for corn was $591. We know that harvest price was $488. We know that the expected county yield for non-irrigated corn in Stutsman was 146.5 bushels. That is a published RMA number. It's in the actuarials every year. It's easy to look up. The only thing we don't know is what the final county yield for Stutsman will be, and we won't know that until June. So I just started doing some examples just to play with the numbers. The premium on the SCO, if you took a 75% RP policy, the premium was $15.41. If the county yield came in at 150, you'd just about get your premium paid for. You'd have a loss of $14.59. And how we get that is we take that 591 spring price times your 165 yield, and they do the math, and your guarantee here is $107 an acre. Again, we started at 146. We're going up to 150. Just like RP, if the price drops in the fall, you can be higher than your bushel guarantee and still have a revenue loss. And so that's what's happening there. Now, if you want to get all $107 of this thing, you have to go down to 133 county yield. That's where it will pay out the whole $107.27 an acre. Now, going the other way, again, 133 for the final county yield to have a full payout when the price dropped. So now let's say the price went up this last year. Instead of going down to 488, it went up to $6. So you get a little more coverage per acre because we use the higher price. In this case, though, now we've got to drop all the way down to 109 bushels for the county yield to have this thing max out. So because this is an area plan, you really kind of want to get a feel for how much things have to move, and a price drop is going to help you, so much more than having just a bushel drop, because it's going to be hard to get a bushel drop that low unless it's a really, really rough year. But one thing you can look at to help you out there, this is the last 20 years history. I can run this for anything. It shows what RMA determined was the expected yield, the final county yield, and then the base and harvest prices. These are the same as the RP ones. And at the end, what years did you have a revenue deficiency? And this would have paid out in 2004, 2008. Is that 12 or 13? About 4 or 5 times the last 20 years. Now for 2023, like I said, for Stutzman, the expected county yield was a 146.5. This year, they're raising that to 150.9. That's a pretty big increase in 1 year. And I have no idea how RMA comes up with those numbers. That's what we're sitting at this year. ECO. Now this gets really expensive because we're talking very, very shallow losses. You only have a deductible of 5% or 10%. So again, we're looking at the 75% RP, same example. This is the same coverage we saw before. Now we're going to have, if we take the ECO all the way up to 95, get another $88 worth of coverage. It's going to cost $27 an acre. If we pull that back to just going up to 90%, about cuts it in half, $39 of coverage for $11 an acre. And again, we could stick SCO in the middle of this and add it all together, or we can leave that gap in there. Everything works the same way at loss time. So in this case, though, even with the price, let's go back. So on the SCO side, again, using the real numbers from 2023, you'd have to go all the way down to 133 to get your $107 payment. On the ECO side, though, it only has to go to 152 to have it fully paid out. And again, that's higher than our 146 because we have that big price drop. So in this case, at 152, the ECO maxes out at $87.76 coverage. Premium was $27 versus the SAO. You had to get way down to 133 for the county yield for $100 of coverage for $15.40 an acre. We've sold a little bit of this. We had a couple that paid out a couple of years ago. If this interests you, I would really encourage you to sit down with your agent and go through the spreadsheet so you get the feel of how much that county yield has to move or how much the price has to move. And then how likely is that to happen this year? Which is, again, you're looking at the crystal ball, but not necessarily a horrible product, but it is just very expensive in the right year. In 2021, it paid out for a lot of people. 2022, it did not. So again, you make an educated decision on that. That is all I have. Does anyone have any questions? You can type them in the chat if you do. We did have one question in there. It said, what are your ARC and PLC recs for wheat, corn, wheat, soybeans, and canola? Randy, you want to take that one?
Oh, sure. I guess what I would recommend is for the main three, the wheat, the corn, and the soybeans, I would be looking at taking ARC, mainly because of the prices likely not being able to drop down far enough, or because of, ARC actually has a little bit, because with the Olympic average, we're actually seeing some movement in prices. And so I think ARC is a little bit better there. And it's unlikely we're going to be able to get down low enough to be able to trigger the PLC side of things. Wheat is the one catch-all, is the one that might be able to do PLC, but I think that you have a better chance of collecting with ARC than PLC, though. For the miners, sunflowers, canola, barley, any of those, I think you still have to go with the PLC side. So it really hasn't changed much over the years. Next year, it's going to get to become a little bit more of a challenge, I think, if they continue to increase the reference prices. Then it's going to become a little bit more of a challenge to try to figure out which one to take. But for this year, I still would lean for wheat, corn, and soybeans, ARC, and then PLC for everything else.
I will turn this over to Randy. I will be watching the chat, and I'll interrupt Randy if you guys have something. Well, this is really informal. If you have a question as we go along, please stick it in the chat, and we'll talk about it.
Okay, I've got a question first, though.
Yes.
How do I advance the screen?
Oh, if you hover over it, you should see a little arrows.
Okay.
Right below where it says 2024 grain update.
Perfect. It's not that I don't remember, it's just, or I don't have a memory, it's just not very long. So, but
Turn your camera on.
oh yeah, turn my camera on. See, I got to get trained every day on this stuff. So technology is always great when it works, but sometimes it doesn't work the greatest. So, well, I guess I have the challenge of trying to explain what's been going on as far as the marketplace is concerned. And, it's been less than interesting is probably the best way to put it here. Since around Thanksgiving, we've seen what seems to be more of a downturn in the market than anything. We've had a couple of visions of grandeur where the market's tried to move up and try to do a little bit of performance, but it seems to always be getting hit in the head with something that comes into play. Yesterday we had a really nice rally go in the market, and I think there is some events that are taking place that warrant a little bit better performance in the marketplace right now. We've got a couple of things that are leading up to show us a little bit better news or a little bit better performance could be on the horizon. But a few things have to step in line for all that to happen. So looking at it first, I guess I got to put a disclaimer out there just to make it legal. So so NFA doesn't get mad at us that, there is risk and what we talk about is risky. So, but I want to take a step back and look at what the CONAB came with their, just look at what the January crop production numbers came out as. What USDA said, what CONAB said. CONAB is basically the statistical service for Brazil, and they come out with their estimates on what they expect the production to be at. Of course, Brazil has two corn crops. They have their first corn crop, which is about 25% of their production. Their second corn crop is 75% of their production. Their first corn crop gets planted with the soybeans and is being harvested right now. The corn and soybean is being harvested right now in country, and that's the first corn crop. The safrinha crop gets planted after the soybeans are harvested, and then that gets harvested a little later in the year. And that's the one that has a little bit more concern because it could get pushed a little bit late into the growing season, which could relate to some frost damage or some not enough growing season to mature. And that is leading up to why Brazil is looking at cutting back their corn acres. One, their soybeans got planted late, which isn't going to give them enough time for the corn in all the country, on all the safrinha corn area, to be able to mature. So some producers cut back on their corn acres because of that. Others because of the fact that the economics were not there for being able to raise corn. So they backed away from that second corn crop. Some of them are only going to go with soybeans, some will go with cotton, but we're looking at a pretty sizable reduction in the corn crop just because of reduced in acres. And now we've seen some production problems as well. Total production for the corn crop in Brazil is estimated at about 117 million metric ton, down from their 132 that they saw last year. What's interesting, though, is they have not changed their production or estimate for the second corn crop, the safrinha crop, mainly because it's just being planted now. They haven't taken the risk to figure out if it's going to see any change for the second crop yet. Now, that's just being planted. Estimates are that it's going to be lower, and we're going to continue to see a trimming of that Brazilian corn crop because of the fact that we get a little bit late getting the soybeans off and because of the economics for corn. What I find to be the most interesting from CONAB's numbers from January is the fact that we're looking at what they said for corn exports. They are estimating now exports to only be about 35 million metric ton. That's down from 56. So that 21 million metric ton is equivalent to about 750 million bushels that they are not going to be exporting, that somebody will have to pick up the slack on that. Now, we have seen a little bit better crop in China, which will slow down some of their imports. We're seeing a better crop in Argentina, which Argentina will then pick up some of this lost exports out of Brazil. But we still would likely have about half of that, about 300 million, that is going to have to go someplace else to be able to pick up the slack for exports. And I think that's where the U.S. kind of comes into play. Now, as I mentioned, they're planting that crop now. So we're really not going to see a lot of concern or issues with that second corn crop here for a while yet. So I don't think corn's story is going to be told here for another couple of weeks. I've been saying about the middle of February, we're going to see a little bit better performance with corn because of the issues that we're going to be seeing or potentially could be seeing out of South America. So I think that right now, corn has got a story that's going to be told, but it's going to be told in a couple more weeks. What's also interesting is when you look at the soybean production number. Soybean production that from CONAB has it at 155 million metric ton, which is virtually equal to last year. Now, Ag Resources came out with their numbers this morning, and I think they came in at 145 million metric ton. So in country, a lot of companies are declining or decreasing their production estimate for soybeans. And from what I'm hearing from our contacts in Brazil is that the crop is not there. One producer in Paranara that I talked to a couple of weeks ago put it as a life-changing event, is how he termed the crop, which means, and he didn't mean it in a good way. He meant because of how low or how poor the production is. A lot of yields coming in about 10 to 15 bushels an acre, and there is a lot of abandonment with the soybeans too, just because they just aren't being worth harvesting. So that a lot of that is not coming out as of yet because they are so they're just in the infancies as far as their harvest is concerned. But I do think that that's going to also be a story that keeps moving forward, but it's not likely going to help our soybean market until April or until May. But we have other issues that are kind of hurting our as far as our shipping is concerned, just because of logistics of the drought concerns that we're seeing in the Panama Canal region, which is slowing down the shipments, or at least they can't load the boats fully, which is costing more because it's taking more barges to move through the product through the canal. So that's costing more. The trouble that we're seeing in the Red Sea with, of course, the Houthis and the attacks that they're having on a lot of vessels. A lot of boats starting to now go around the Cape of New Hope, which is adding about 3 weeks of shipping to a lot of the products. So we're seeing a lot of logistics issues just because of the shipping side of it, not because of the product side of it, mainly just because of the shipping side. Now, looking at as far as what USDA said for us in the January report. Now, the January numbers were actually USDA's first final. That's kind of how we deem it, because when you look at what they did in the wheat market, they went back to 2021 and made adjustments to the demand side, and that impacted the rest of the years going forward. USDA came in and increased feed demand for 21 wheat by 24 million bushels, lowered its ending stocks. That lowered the beginning stocks for 22. They did cut feed demand in 22 by 12. So that's where we came up with a 12 million bushel decrease in our ending stocks estimate for 22. That followed through into decreasing the beginning stocks for 23, and another minor change with, I believe it was with the seed demand. In all, we saw wheat stocks cut by 11 million bushels when we were expecting no change at all. So that was a little bit friendly when you look at it for wheat. Now we're looking at a stocks estimate of 648 million. Not tremendously friendly, but it was friendly compared to what we were looking at before that. There's other stories with wheat that we have to talk about that isn't as good. For corn, a lot of revisions hit the corn market. Old crop actually saw friendly numbers, with production being cut by 64, but we did see a decrease in demand, which we left stocks only about 1 million bushels of change. But what the bad part was is USDA came in, they lowered the harvested acres, which when you lower harvested acres, you're also going to increase yield because you take away the worst acres that would be harvested. So yield is going to go up a little bit. That pushed the national average yield to 177.3, which was a record for corn production. I'd probably question if we had a record crop. We had a good crop, but I think if you look at what happened as far as the Southern Plains, especially Nebraska, I kind of would wonder if those yields really did see that big of an increase. That pushed our production up of 108 million bushels, putting it at a record 15.3 billion bushels. So that was where the dagger came into the corn market. We also did see stocks increase by 31 million bushels, which puts them at 2.1. That was a little bit daunting. I mean, that's a very comfortable ending stocks estimate for corn. And it tells us that corn really doesn't have to push a lot going forward. If we do get those exports that I'm talking about, where we could get, between 200 to 300 million more demand come into play, Now all of a sudden we start talking about a number that gets to be a little bit closer to where we've been at the last couple of years, and a little bit tighter supply, which means we need to put a little bit more of a risk premium back in this market. For soybeans, the big change came in again. They lowered the harvested acres, which meant the yield was going to go up. We saw production go up by 36 million, increased stocks by 35, putting it at 280 million bushels, which isn't burdensome, but it's getting closer to being a little bit more than comfortable, but not burdensome. So there's some things in these numbers that I think USDA is kind of underestimating, one of them being the crush side of it. So I think our crush has been running a little bit better than what USDA is kind of projecting. The big number that really kind of stuck, I mean, the trifecta for corn, not only did we see the yield, not only see the production, but we saw world ending stocks increased by 10 to 12 million metric ton. And a lot of that came because of the increase in production in China. China's stocks increased. Now, it really shouldn't matter because China does not export corn. They do not export wheat. They do not export soybeans. Their production is landlocked. It doesn't go anywhere. Actually, they import product, all three of those products, because they do not produce enough to feed their country. So it shouldn't really matter what stocks that China has, but the market took their production numbers and their stocks estimates to heart, basically copied them into our numbers. And that was kind of the trifecta that hit the corn market that day. Soybeans and wheat didn't have that bad a number when you look at it for ending stocks for the world side of things, but it was kind of the corn that was telling the story more than anything. Now, for wheat, kind of the best story that came out of those numbers was what we're looking at as far as planted acres. We were expecting to see acres decrease for winter wheat. They actually dropped a little bit more than anticipated, which was a little bit friendlier towards the market. Right now we're looking at about 1.6 to almost 2 million less winter wheat acres. We were expecting those acres to come out of the soft red winter wheat crop, but instead they came out of the hard red winter wheat crop. The Kansas, the Oklahoma, the Texas area, which was kind of a little bit of a surprise, but that's also the area that seems to be seeing the best performance right now with the wheat crop because of the recent moistures and the recent rains they've been getting. But as we mentioned, this is the first time in the last 4 that we saw winter wheat acres drop. The last 4 years, we've seen a little bit of an increase because they had good base prices, the markets were doing well, and they were planting more winter wheat. This year, now we're seeing a little bit of a downturn, and I would expect that same scenario is going to play out in spring wheat. When you look at the winter wheat states, every state, pretty much the major ones, all saw decreases. The ones in red here are the states that saw decreases, with Kansas actually seeing almost a 7% decrease from the previous year. Colorado dropping 13%. Oklahoma down close to 6%, close to 8% in Texas. I mean, that's the main states that produce the winter wheat. The rest kind of fall in line behind. So it was interesting to see that it hit in the southern plains more than anywhere else. One thing that we are also looking at, from April to November, we see USDA comes out with weekly crop progress reports. Now, once we get into the winter time, we actually see it on a monthly basis. So from the month of November to the month of December, we saw winter wheat improve. They got some good rains. They got some snow. Things improved nicely across the southern plains and across the winter wheat region. Now we just saw the numbers come out on Monday, and again, we saw a pretty good increase, especially when you look at the soft red areas and also into the hard red winter wheat areas. Illinois' crop improved by 20%. That's been flip-flopping back and forth. So now we actually saw another improvement. So it's likely it could start coming out of dormancy in some pretty decent shape. Kansas improved by 11%. Nebraska's improved by 21%. We did see North Carolina drop by 13%. And these are, what are these, 8 states, 9 states? These are the biggest producers in the big picture for winter wheat. So goes these states, so goes basically that market. So it's kind of interesting to see a majority of them seeing a little bit of an improvement, some pretty good improvement, where some did see a little bit of a decrease. It does tell me that this crop is off to a fairly good start, and we likely, if it continues at this pace, we're going to see a little better than average winter wheat crop. That tells me, though, that we could be seeing quality a little bit off, and that would help to bring some demand in for our spring wheat to be able to blend with that crop. Winter wheat production last year was pretty much mundane. I mean, it came in pretty close to where they've been at since 2017. Nothing major. They did have some production issues. Spring wheat, we saw our acres increase, which was the first time in 4 or 5 years for spring wheat. Right now, Farm Futures did a survey, per acre survey, a couple weeks ago. They came in with an estimate of 9.1, I believe it was, for spring wheat acres for 2024. That's a pretty drastic cut. To see a 2 million acre decrease is pretty large for up in this area. I do expect that the spring wheat acres are going to decline. I would expect they'd be closer to 1 to 1.5. So 2 seems to be a little bit heavy, but I do think that we are going to see a little bit lower acres hit the spring wheat region because of the price, because of the lack of demand, and because of wheat is not wheat when you haul it to the elevator like you've got corn and like you've got soybeans. So the other, when you look at production, we had pretty decent production last year, but even with as good as the crop was in a lot of areas, which we were saved by the drought, it wasn't enough to be able to get us up in any record levels. It was the best we've had in the last couple of years, but still falling a little bit short on the production side. The one crop that's kind of interesting this year is it's going to be durum. Prices are holding up fairly strong in the durum market, and I think they're going to see an increase in acres. And that kind of scares me a little bit about durum right now. Because of the premium they're holding over spring wheat, I think a lot of producers, especially north, central, northwest, will see a switch over to durum. And if you're looking at increasing durum acres, I certainly would be looking at having a contract to sell it, because I'm a little worried about what could happen to price if we do see that increase in acres like I expect. Right now, the average estimate has acres staying unchanged for durum at this point. Supplies are tight, and that's what's helping to keep the price up. My concern is that, though, we're going to start to see substitution of spring wheat for the durum if the prices get too far out of alignment. And when you look at it, the durum production was pretty low when compared to the last few years, other than 21 when it was horrible production. But when you look at the numbers, it's kind of a busy chart, but 23-24 is basically the supply and demand numbers USDA has for the wheat market right now. This is what they came with on January, saying we've got 648 million bushels, which is in line, with what we saw the last couple of years, a little lower than what we saw in 20 and 21, but a little higher than 22. They're projecting that we're only going to cut acres by 2.6 or 2.4, and then see a little bit better yield. And they're looking at stocks going up to about 728 million bushels. I think this is a little bit high for wheat right now. I do expect we'll see a little bit more of an acres reduction. This really only accounts for what we're seeing in winter wheat acres lost, not spring wheat acres. So that will help to, once we see what spring wheat acres come in, we'll see that pull down a little bit. But I do think our demand could be a little bit better. Our biggest thorn in the side has been Russia taking away the export side of things, and our exports, they're expected to increase up to 800, but that is still very low when you look at it for wheat. The 725 that we're looking at this year for exports for wheat is the lowest in 40 years. So you can see we're just not quite there where we should be. We should be exporting about 1 billion bushels, and that would certainly make a big difference as far as the S&D numbers are concerned. But like I said, Russia's been claiming a lot of the exports. They've had now for the last 2 years have produced 92 to 94 million metric ton crop, which is huge. They're expected right now, production is expected to be that big again for this next year. We'll see if that comes into play. They are having some production problems because of weather at this point. And when you look at it, the two biggest sources for demand for wheat are, of course, exports and food demand, domestic consumption. And you can see how bad our exports have started to drop over the last couple of years when we've kind of not been very competitive. And it's tough to be competitive when we can't really ship the grain right now. Our shipping costs are what's really kind of knocking us out of being competitive in the wheat market. And also, you've got Russia dumping the wheat, you got Ukraine dumping wheat, and you're looking at a skirmish in the Middle East, which is the largest consumer of wheat in the world. So it's hard to get product into a region when you've got vessels being attacked. As far as export sales, we've been running the green shaded line is basically our 5-year average. The blue line is where we're at right now for wheat exports, and the orange line is the pace we need to make. And you can see we've been running below the 5-year average here all year, except for when we got to about week 26, 27, right in that area where we had this jump. That's when China came in and bought that soft red winter wheat from the US. That spiked us up and also helped our market rally 35 to 50 cents. We had a good rally in the market at that time, pushed Chicago from being at extreme lows back up into being tightening up the spreads between the classes of wheat. But that helped bring us back up to the bottom of the 5-year average. And right now, at the pace it's going at, we probably will make USDA's projections of 725, but it's going to be tough to do anything better than that. When you look at who's been buying, right now, nobody's been buying wheat really too aggressive. China, with that purchases they bought around Thanksgiving, it kind of pushed them up to be one of the bigger buyers of wheat from the U.S. Mexico is the next biggest, and then we've got the Philippines. But nobody has really been in buying aggressively or buying as much as they have in the past few years. And that's kind of the problem. One of them has been our stronger dollar. It hasn't helped either, but that now has started to come under a little bit more pressure too. And when you look at the share of what U.S. has as far as wheat exports, back in 16, 17, we were 16% of the world's exports for wheat. Right now, we're about 9%. So you can see how much we've dropped off over the last few years. And you can see just where our paces were in each of those years too. A lot, we were moving a lot of wheat at one time. And when you look at the big producers of wheat, of course, the European Union is the largest, but they also supply within countries. So a lot of that stays within the European Union bloc countries. The next biggest producer is Russia, and they've been seeing an increase in production over the last few years. And then the U.S. kind of comes in as the third producer largest producer of wheat. These are all the major exporting countries as far as wheat is concerned. So when you talk about wheat, these are the ones that you watch because they're the ones that are exporting the product. And here's where the exports fall into play for most of the countries. And you can see that since 2020, Russia has been the leader. We gave them a run for their money in 21, but for the most part, it's been Russia that's been leading it. And then the U.S. then European Union coming in, and then the U.S. coming in behind that. So, and when you look at the ending stocks estimate, the U.S. holds the most stocks, but we've been our supplies have been decreasing, which is from a good sign. I mean, anytime you see stocks reduction, that's a positive for the market. But we have started to stabilize a little bit over the last couple of years now, mainly because of slower exports. Looking at corn, as I mentioned, corn actually put in a record yield last year, just a little bit below trend line at the 177.3. This shows the trend line yield for corn. And on average, we add 2 bushels every year. So this year's trend would have been like a 179. Next year's trend would be close to a 181 area, somewhere in that level. So that's what USDA is going to use for their projections is the trend line yield. But you can see that for the years from 2014 through 2018, we were a little bit above trend, and we've been at or a little bit below since then. This year, it'll be interesting to see where we fall as far as yield is concerned. But as I said, production actually set a record this year, not by much, beating 2016 by about 200 million, but still setting a record as far as production is concerned for the corn market. One of the issues, actually exports have been running fairly decent for corn. They've been running a little bit of ahead of last year's pace. That's the only market that is ahead of last year's pace for exports. But our ethanol production has been running a little bit behind. The gray bars show where the 5-year or where the record levels are at. And then the blue, green, and red show where we've been at over the last few years. And you can see the red line, that's been so far for 23, 24. We've been a little bit behind as far as our production is concerned from even 21. We did have production come out last week and we plummeted. This green line right here is this year's production. And you can see we are right up around that 1 million barrels a day almost now, or million gallons. Now we're dropped down hard. That decrease was mainly due to the cold snap that went through the middle parts of the country last week, and it slowed down production tremendously. We did see a good recovery this week, but it's still not back up to that pre-cold snap levels. The red line is where we need to be at to make USDA's projections, and you can see that right now it's going to be interesting to see how this year stacks up. If things don't improve on the crush or on the grind side, we might not be able to make USDA's projections for ethanol production. And that's the one thing that's kind of stands out as a little bit of the negative as far as corn is concerned. Stocks have been seeing a big increase. The red line is this year's, and you can see for quite a few, 1, 2, 3, 4, 5, 6, 7 weeks, we saw big increases in stocks. Now this last week, we saw a pretty big drop, over 1 million barrels drop. We always see a little bit of an increase. You can see that's the trend, and that's as we build stocks for the summer driving season. So it was nice to be able to see this big drop. Maybe this nice weather has convinced a lot of people to start taking some trips and driving a little bit more. So that was positive. Gas demand did see a little bit of a recovery. We had plummeted down to below the 5-year average. The blue lines are the 5-year average. Last year's in black, and so far this year's in green. So we did see a little bit of a recovery, but we're still behind last year's pace for gas demand. And this is kind of a daunting number when you look at it as far as corn's S&D numbers. USDA, these are from the January numbers, and they show that 2.1 billion bushel ending stocks estimate. Like I said, if we can push those exports a little bit more and get them back to where we were at some of our previous years, up to a 2.3 even, that would certainly help bring our stocks down. But for the last 4 years or 3 years, we've had some pretty comfortable or tight stocks as far as corn has. That's kept the price up. Now we're seeing a pretty good build up in our stocks, mainly because of our yield and our production being almost 2 billion bushels above the previous year. That's really where our stocks have come from. This next year, even though we're looking at a little bit of a decrease in acres, like I said, the yield is expected to go up a little bit. That with the demand picture, they're saying that we're looking at about a 2.6 billion bushel stocks estimate. Now, I think this is going to be the worst number you're going to see for corn for the year. I would expect that our acres will be a little bit lower, mainly because of some of the acres dropping in some of the fringe regions. And I do think our yield isn't going to hit a 181. That's a pretty aggressive yield to have a national average yield hit that. I do think our demand numbers could see a little bit more of an improvement. I think feed demand will be a little bit better. The cattle numbers, the cattle on feed numbers are continuing to show good number of cattle in their feedlots. The numbers did not show an increase in the cattle herd in the report today. We're actually looking at it being somewhat stable, maybe a little bit lower than the last few years. Nothing out of the ordinary. So I think that the feed demand, and we're also seeing a little bit more hogs, the feed demand is going to continue to see a little bit of an improvement. I think that'll help. And we're seeing a little bit more of a push towards the renewable fuel side, not just on the ethanol, but we're also looking at a lot of sustainable aviation fuel being made out of ethanol that is helping that will help push that market. So I do think this is going to be the worst number that we're going to look at for the year. I think corn is actually going to be somewhat close to 2.1, maybe a little bit less than that for ending stocks for 24. So I'm not looking for this market to see a big drop. It's not going to make a big rally either, but I think at least it's going to be able to maintain and at least stabilize itself. When you look at it as far as demand, the two biggest demand sources for corn are ethanol and feed demand. That's the two we pay the most attention to. Exports, corn is not an export dependent market. It just helps to export. And it would be nice to be able to keep that above that 2 billion bushel level. And that would certainly help chew through some of the stocks. Right now, our biggest problem, why our exports aren't as strong as we'd like to see is because of Brazil's strong crop last year and the fact that they are now the world's largest exporter of corn. U.S. is number 2. They kind of overthrew us this year because of their bigger production and the fact that they were able to get China's attention and sell a lot of corn into China. When you look at who's our biggest buyer, it's Mexico. What's nice, there's one nice thing that's it's kind of a caveat that is helping with Mexico. Of course, everybody knows about Mexico is looking at not buying corn from the U.S., especially GMO corn. They want to buy all white corn. That was likely more just political than anything else. They're having a president election this summer. The president that is there now cannot run for re-election. So they will have a new president that gets elected, and it's likely this white corn, GMO corn issue will fade into the sunset once we get into the summer. So we won't have that issue. What's interesting is when you look at the numbers for corn for exports, like I said, Mexico is our biggest buyer. And as soon as Mexico announced that they were going to shut off imports from the U.S. and not buy GMO corn, all the end users and all the milling, feed mills in Mexico came to the U.S. and bought corn because they wanted to get their needs met before there was any kind of a ban put on. So Mexico has been a very aggressive buyer of corn from the U.S. and continues to dwarf pretty much everybody else. Our sales, like I said, are running about in the middle of our 5-year average, which is good. I mean, it's actually holding up there fairly decent. When you look at it for China, though, we're at the bottom. And really, China does not come in until about week 22. That is right now about 3 weeks from now, which puts us in that time frame I was talking about, that middle of February, when we have a little bit better idea of what's going on with the safrinha corn crop, whether it's going to get planted, how much is going to get planted, and what it looks like when it's first starting off. That usually is the time frame that we start to see China come back into our market to buy our corn, because that's when they know where they're going to have to start sourcing their product. As I mentioned, Mexico, well above their 5-year or their 3-year average pace. So they've been aggressively buying just because they want to get the product before the government put any ban on. And like I said, right now, it doesn't look like that's going to be an issue. So for soybeans, we came in close to trend line. The production came in decent as far as the yield was concerned. I would call it a decent year for production side. Our acres did see a little bit of a drop. When you look at it for production, we were right in line with where we've been at over the last 4 or 5 years. We're above 19, but below the 2021 and 22. So it was a good year, but it wasn't a banner year like what we supposedly saw in the corn market. But what's really the interesting story as far as soybeans are concerned is what you look at as far as the crush. The NOPA crush numbers come out. It's about 89% of the crush facilities in the United States belong to the NOPA crush organization. And the gray bar, just like we saw for the ethanol, the gray bars are the record. The blue lines are where we were last year. And you can see quite a few months were record high production or grain or crushes for last year. The red ones are where we've been at so far this year. And the last 4 we've seen is record crushes. We have a census crush coming out tomorrow, and we'll see what they say for the December numbers. But right now, the estimate has it coming in as a record as well. So you can see where we've been at over the last few years. This goes back to 16. The red line is where we're at right now as far as crushes. So we've been outpacing our previous years by quite a bit, and especially the last couple of months. Now, you would expect that if we're crushing that much, we'd start building our stocks. Our stocks are actually at the lowest levels they've been at in the 7 years as well. Seeing a little bit of an increase, but still a little bit below where we've been at in the past few years. Now, looking at soybean numbers, I found a couple things interesting in the numbers. Again, we look at where we're at, what USDA said for us for January, and they came in at a 280 million bushels ending stocks estimate. For this next year, we're looking at acres increasing Yield is going to go up a little bit because, again, it's trend line yield. We go up about a bushel a year, half a bushel a year, I think it is, on trend. But then when you throw the demand numbers in, they're expecting our stocks to go up to 346 million bushels. Now, a couple problems with that. One of them is that they're only showing an increase in crush of 75 million bushels. That's a number to remember as we go forward here. So some of the things I'm going to talk about. Exports are expected to rebound a little bit, but I think that crush number is a little bit low for what we're seeing in the industry. And also looking at, I think acres could be maybe a little bit higher, but I don't know. The yield is going to be the biggest question going forward. So I think, again, just like what we saw in corn, that the 24, 25-year supply and demand estimates are likely going to be the largest that we see for the year. I forgot to mention that these numbers they come from the Ag Economist, and it's from the Ag Outlook Forum that gets where USDA uses the numbers to figure out what they're looking at for being able to make projections for government programs, for payments, and for programs. These are the numbers that the Ag Economist put out, and the first year out, they're fairly accurate. Once you get down to year 3 to year 5 to year 10, they're a little less accurate, but they get fairly close, especially on the demand side of the equation. When you look at it as far as soybeans are concerned, the two biggest sources are exports and crush. And you can see that exports, again, pretty wavy line, but the crush line has been a steady increase and moving up fairly good as far as soybeans are concerned. For exports, for the 5 years, you can see that we are in the bottom 25% of the range. We will likely make our projections right now, but that's also at the bottom of the 5-year range. And part of that is because China is at the bottom or below their 5-year average pace. Again, a lot of their soybeans are being sourced out of Brazil right now. And the fact that Brazil had a year-long export because they had such a big crop, it took so long to export a lot of their product. They've been in the market a little longer than normal. Now they're harvesting again, so now they'll start to see some new supplies come available, which will likely capture that export market at least through that April-May timeframe. And when you talk about exports, really the only one to talk about is China, because even at the lower numbers, they're still by 52% of the soybeans that we export goes to China. 2 out of every 3 in the world still go to China. So, they are the 800-pound gorilla when it comes to soybean exports, and one that we have to watch. The next closest competitor is Mexico at 9%. So you can see that they are the soybean market as far as the U.S. is concerned when you talk about exports. World production, we gave up that throne to Brazil back in 2019. They are actually outproducing us right now. We're the second largest producer. Argentina comes in behind, mainly because of they're very consistent, and they've had a drought the last couple of years, so their production has been down a little bit, but they've been somewhat consistent. As far as exports, since 2016, Brazil has been leading the export side in the soybeans. We started to see the transition from U.S. In 2016, a little bit more in 17 and 18. 19, 20, we were able to get into the export market pretty good because that's when we had the trade agreement with China. And then it's slowly gone down since then, where we've been a little less a part of the equation. You notice here that Argentina, for exporting whole soybeans, they're not part of the game. They do not export a lot of whole soybeans because they crush the soybeans. They make soybean oil, they make soybean meal. They export those two products. They export 50% of the world's demand for soybean oil and soybean meal. And that is kind of their claim to fame. It's not exporting the whole beans, mainly because of the taxes, the export taxes that they have in place for the products that they produce. When you look at ending stocks, Brazil is starting to build a lot of stocks just because of their production. They don't have the infrastructure to move everything right now. That's part of their biggest problem, is that if they could get that infrastructure scenario figured out, they would really become a little bit more of a force to be reckoned with than they already are. But Argentina also holds a lot of soybeans, mainly because the soybeans have value. Their peso has no value. So they'd rather have the soybeans because they can trade that for product or for goods. With the Argentine peso, they can't buy anything because it has no value. Looking at canola quick, planted acres in the U.S. has seen a pretty good increase all the way since 91 when we kept track of this. We had a good spurt in the early 2000s, but now we've really started to see a pretty good climb in canola acres in the U.S. What's really nice about that is production's been climbing at a good rate, but our stocks have not been increasing. So whatever we're producing, we're using most of it. So that's a little bit friendly on the canola side of the market. Looking at it as far as the canola for Canada, acres peaked out in about 10, 11, and they've been somewhat stable since then. We haven't seen much activity as far as the canola acres in Canada as they seem to have matured their years, or that product has seemed to kind of have matured right now. And maybe they've kind of, it's run its course within the country. We haven't seen a lot of increases in the canola production. They're actually looking at decreasing acres this year, but they have some initiatives coming into play that I think is going to increase the canola acres up in Canada. Production has been seeing a little bit of a downturn. Stocks are also seeing a little tightening. So that's friendly for the canola market as far as Canada is concerned. Flip side, looking at it as far as exports for Canada, you can see their exports are in red, and they've slowed down, especially when China kind of stepped away from their market and stopped buying from them. Their exports took a little bit of a hit. But take a look at the blue line. That's U.S. imports, and we've actually seen a huge increase to the tune that the U.S. right now is the largest importer of canola oil from Canada this year. So we're importing the most canola oil, not for using it in the consumption, the human consumption side, but we're using it in the renewable diesel side. One of the things that kind of scares me now, just taking a step back and looking at just what Brazil's been able to do over the last few years. They started with, in 2014, they planted 79 million acres of soybeans. They're up to 112 million acres of soybeans right now. They planted 39 million acres of corn that year, and they're up to about 52. And you can see where their production estimates have grown over the years. And they've taken away our corn export market. They've taken away our soybean export market, and they're now the largest producer of soybeans, or have been. So you can see that their plan is to kind of slowly take over production agriculture, especially the soybeans and the corn. And they've got it where they can almost pull it off. When you look at the country, they got 2.1 billion acres that's from in country. It's from tip to tail, that's 3,500 miles long. So it's a big country. 69% of their acres is tied up. That's not going to come into cultivation or come into anything. It's going to stay in either forest or it's going to stay in the urban areas. But right now, 7% of their acres are being farmed, and that's about 148 million acres. They have 23% that's in pasture, or about 490 million. And their goal, or their plan, is to tear up 5 to 6% of those pasture acres every year to keep bringing it into production. So that's the goal of Brazil. Now, the nice thing about it is that they really, or the misfortune is that they don't have the infrastructure to be able to handle that much product. Right now, they can't ship what they're already producing, but if they could get their logistics problem solved, and they could start looking at other countries investing, especially building export facilities and building logistics to be able to move grain, they would become a pretty big force for us to have to reckon with. And they're looking at slowly bringing this land into production. And, within 20 years, their landscape's going to look a lot different than it does today. That kind of leads me into the next story that I think, we've been hearing a lot about the biofuel side and just how big this really can be. This actually is a picture of the renewable diesel fuel plant out in Dickinson. Right now, I think that's kind of the direction that a lot of our products are going, mainly because we need to have a demand source domestically to help offset what we're losing as far as the export side of things to Brazil and other countries. The Iowa Renewable Fuels Association had a meeting last week, and this is some of the numbers that they came with. Right now, petroleum supplies 94%, is 94% of our current supply of fuel. Biofuels handles about 6% of our current supply. 70% of that is ethanol, 13% is biodiesel, and for the first time, renewable diesel has taken over is more than biodiesel at 14%. What's interesting is California right now is using almost 60% of the bio-based diesel fuel that's being produced in the United States. So they're the ones, that's who we can blame for this. They're the ones that kind of started this to see the renewable fuel side, or to see the less carbon or smaller footprint as far as the carbon is concerned. And that's why we started with the renewable diesel fuel, or that's why it's starting to gain some traction. Looking at it, I mean, right now, renewable diesel fuel basically is taking soybean oil, used restaurant waste oil, animal fats, any kind of vegetable oil, and refining it to the degree that it is diesel fuel when it's done. So the difference is that we're taking 100% soybean oil or vegetable oil, animal fats, and by the time we're done, it's a diesel fuel drop-in product that you can't tell the difference between the fossil fuel side of it to this side of it. So that's, and to the point that we're already burning it as far as in the US is concerned without even knowing it, because it doesn't have to be relabeled. California, as I said, started this because of their low carbon fuel standard that they came into play with to give incentives to be looking at using these fuels. They were the ones that started the mandates. Other states have joined in behind, and when you look at it, the ones in blue are the states that have some sort of mandate in place. And increasing that mandate to be able to be using more of the biofuels, primarily looking at renewable diesel fuel and sustainable aviation fuel. Part of that, like I said, is because of the small carbon footprint that we look at as far as the renewable diesel fuel has. And the scale is right, but the numbers aren't correct. I mean, it's just to put it in perspective. And that is, fossil fuel or petroleum, crude or diesel fuel has a carbon score of about 100. Once you go to the renewable side, its carbon score drops to about 41. So if you're going carbon neutral, where would you rather start from? You'd start from 100, or do you want to start from 41? And that's been the biggest push, is that there's a lot of large trucking companies and the airlines that are saying they're going to be carbon neutral by a certain time frame. And this is helping to spur this on to get it moving a little bit more, or gaining a little bit more traction. When you look at it, as far as the soybean crush plants across the U.S. right now, I believe we have 60 of them. This is kind of where the locations are. You can see that, North Dakota's got a few. Minnesota, that's actually one that was expected to be built in Minnesota. It jumped over to North Dakota now. There is a small one in Crookston at the college there for training purposes. When you look at as far as renewable diesel fuel plants, they're all in orange. Biodiesel plants are in blue. What we're seeing is a lot of fossil fuel plants being retooled towards renewable diesel fuel, and that's taken a little bit more of a process, and it's a little bit of expensive, but we're slowly seeing those start to get revamped to be able to do the renewable diesel fuel. A year ago, I did this, this biofuels presentation for the canola growers up in northern Minnesota. And I found this slide that kind of talked about where the crush expansion was going to be at. And it showed these 18 plants that were on the board to be built. And this was as of October of 22. These 18 were expected to bring 689 million bushels of more crush capacity to the United States. And you can look at the side here and you can see who's involved in building these, or were involved in the getting these plants going. And the ones that have, the fuel companies or the energy companies beside them, that they're in this because they know this is something that is going to be moving forward, and they want to partake in it. So they've actually bought into this as well. I was invited back to do this same presentation again this fall for that same group and kind of update what I went through with the numbers. And when I went back to all these 18 plants to see just where they were going to be at, or where they're at with their construction in their process, I found something for all of them except for 5 of them. I couldn't find the planning or the numbers for about 5 of the plants, but most of the rest of them had something going for them. And here's where I mean by when I talked about the looking at the crush number for 24 for soybeans only increasing 75 million bushels. Well, there's a plant in Kansas that's going to be operating Q1 at 45 million bushel capacity. You got Illinois, you got Louisiana, all coming in the end of 24. You also have Nebraska coming on in 24, Mitchell, South Dakota. You've got the one in North Dakota in Castleton that is going to be buying soybeans in this. I heard a report from them the other day where they're going to be trying to buy soybeans in this summer and taking by this fall and then starting to crush already. So there's a lot more than 75 million bushels of crush capacity that's going to be coming online in 2024 in the U.S. Just looking at the one at Spiritwood, it's having some issues. It's not running at full capacity, but I believe they will get their kinks worked out and get rolling. Castleton is ahead of construction because of how nice the weather has been. And you got the Mitchell one at $500 million is what that one's going to cost. It's going to be bigger than the one at Spiritwood and Castleton. You're also looking at the one at Grand Forks that is expected to break ground this spring and then be operational in a couple of years. And you can see a couple other ones here as well that are looking to be coming online here shortly. In all, like I said, we've got 60 crush plants in the U.S. that's crushed about 2.3 billion bushels right now. There are 23 plants, either 10 of them are in expansion, 13 of them are being talked about new, and that has a capacity of 750 million bushels that likely will be online within the next 2 to 3 years, slowly starting to come on. So you can see that we've got a chance to really expand the crush side of things. It's not just in the U.S. either. It's also in Canada. What was interesting is about 3 weeks ago, Canada's oilseed processors came out with a statement saying that they are Canada is taking 70% of their canola production and going to push it into the renewable fuels, renewable diesel fuel side of the equation. So they're actually looking at taking their canola out of the export market, out of the human consumption market, and pushing 70% of it into the renewable fuel side of things. 30% then will be used for exports and for the other. Their plan is to, right now, they've got in 2022, they have renewable fuels of about 14 billion liters. They're looking to increase that to 16.6 by 25, and by 2030, they're looking at being 23.3 billion liters. They also have on plans to build 5 large-scale renewable diesel fuel plants up in Canada. Right now, this is where they're kind of looking at. The colored lines are where the plants are right now. The 5 new ones are looking to be built right in this region right here. And you can see basically where a lot of the existing and planned plants are going to be built at. There's a couple of big ones that are being built, and those are in the process of being built right now. So Canada's actually looking at taking a pretty big step into the renewable fuel side of things. This looking at going from last year at 4.1 billion gallons up to about 5.5 just in the U.S. So we're looking at increasing it by 1.4 billion gallons just this year, and then going up to 6 the following year. When you look at the byproducts that are used right now, 40% of the biomass or the feed stuff being made or used to make the diesel fuel is soybean oil. That's the product of choice at this point because it's readily available and it's everywhere. So that's the one that they would rather use. But because we don't have enough soybean oil, 20% is being used from or restaurant cooking oil, which is being imported from Canada and from China into the U.S. to be used to make our diesel fuel. 15% is being made out of tallow, and then canola and corn oil are coming in behind. Canola is starting to catch on a little bit more just because it just got approved to get the subsidy to be made into renewable diesel. So that's a market, or that's a product that's going to be increasing in its feedstuff share. When you look at soybean oil, you can see the blue line is where our crush number is, or if we're going into biofuels. And you can see how much that has expanded since 15, how quick it's gone up. They expect that it will level off in 24. But the one thing about this is from USDA's numbers from their Ag Outlook Forum. One of the things about USDA, they do not anticipate the event. They only report the event after it's happened. So as these plants get to become online more, that number will continue to see a little bit more of an upward trajectory. And right now, when you look at our soybean oil, our exports, we used to export a lot of soybean oil in the U.S. This is from 15 to 21. You can see the green line is where our exports have been at. Since 22, we've virtually exported zero soybean oil. Most of it is all being used in country to make the renewable diesel fuel. And it looks like all the way up until about 25 to possibly 26, we're not going to see much as far as imports or exports. We're basically going to be neutral on that side for soybean oil until we can get more plants up and running. And as far as the animal side of things, the used restaurant oil, we're looking at that right now encompassing about 900,000 metric tons of the product that's going into making renewable diesel. And you can see how much that's increased. And most of this is being imported into the U.S. at this point. And here's where it shows the canola oil. The black line is where the canola or rapeseed oil imports are at coming into the U.S. to help with the renewable diesel side. And that's just, like I said, that's just the diesel side. When you look at the sustainable aviation side, which the airline fuel, United Airlines right now used about 4 billion gallons of jet fuel in 2023, equivalent to about 40 million tons of carbon. They promised to be using 10% sustainable aviation fuel by 2030, which is only 6 years from now. As of 2022, they are only at 0.08%. So they've got a long way to go to get to their 10% goal by 2030. Other airlines, when you look at it, you're looking at about 0.707 for American. Delta's at 0.05. DHL, which is a transport company, product transfer, they are actually using just about a little over 1% of their fuel is sustainable aviation fuel. Now, this Iowa Renewable Fuels Association did a study. They actually had the study done by the Economic Research Group. And their task was what would it take to supply the sustainable aviation fuel, the 35 billion gallons of fuel by 2050? What they came up with is that we're going to need 63 new 200 million gallon ethanol plants, which would grind about 70 million bushels of corn a year. We would need 30 new ethanol to jet facilities. That's the ones that actually will make it into jet fuel. And then we would need 6 new vegetable oil, soybean crush plants to be able to produce enough fuel to be able to supply that as well. So that's quite a daunting task that would come into play. Renewable fuel, diesel fuel increased, or capacity grew by 400% between 2019 and 22. It's expected to double by the end of this year. If we were to produce 100% of our 2022 diesel fuel demand, what the consumption was, it would take more than 160 million metric ton of feedstuffs, which is, in comparison, 10 times what the U.S. produces in vegetable oil in 2022, or 80% of what the global vegetable oil production was. So you can see that it's not likely we're going to get to those levels, because that's just, we would have such a debate for food to fuel that it would be unbelievable, and it wouldn't really get pushed to that level. But it is bringing us a demand source that I think that we need to be looking at, especially with the rampant expansion that Brazil is looking at as far as their production agriculture is concerned. That's what I got. Any questions?
We did have one question a little bit earlier. Back to wheat. Who's buying Ukraine wheat? Are you expecting to see a reduction in the wheat this year for Ukraine? Is that already priced in? Are they having logistic issues getting grain out of Ukraine?
It depends on how they're shipping it. What's interesting about shipping grain in Europe and especially for Ukraine, they're not standardized. Their rail system isn't standardized. So one country might have 5-foot wide tracks, one might have 6-foot wide tracks. And that's part of the trouble you're seeing from Ukraine into the countries next to it, is that if they're shipping trains across, they actually have to lift the cars off, move the wheels in, and then put the cars back on again so that they can. So train traffic isn't very viable. We've had a pushback on the trucks, or Ukraine has had a pushback on trucks taking grain through, especially parts of Poland and some other countries, because those countries had the fear that they were going to stop and unload them there and actually, increase the supply of wheat in their countries. So a lot of that has kind of died down, and they're not seeing as much shipments as grain by truck or by rail right now. But they do have that corridor that they can take vessels. If they go really close to the shorelines, they can move some of the ships through, and they are exporting. Now today, the U.S. egg attaché in Ukraine actually increased the amount of corn and wheat exports out of country. I think they increased the corn by 6% and wheat by 3% because they've been able to ship a little bit more viable. The shipping is a little more viable because they've been able to move a little bit of grain, and there's not the landmines or issues. So they've been able to get out of the Black Sea region by doing that. So they are shipping it right now. Most of it is either going to China or it's going to the poor countries within Africa, is where most of it was supposed to be going through. Russia will not sign on to help with the shipping corridor again. So it's going to be up to Ukraine to handle this on their own at this point, and with the help of some UN and some others. But for the most part, most of it is going to either China or some of it is going into some of the African countries that need it. I hope that answers the question.
So, yeah, any other questions? Put them in the chat. Looks like you covered everything, Randy.
Oh, I doubt that, but it's kind of just to recap. It's been a little bit rough, watching the markets and seeing what they've done over the last 3-4 months, especially since Thanksgiving. We've kind of seen it's been a doubling effect, it almost seems like. But right now we're going into the time of year where we normally start to see some risk premium get built back into these markets. Right now we have zero risk premium in the market. So any kind of a weather issue or any kind of a problem, there is no cushion in this market to absorb that. And so traditionally I do think we'll start to build a little bit of premium back in for that. Also, I think we not only seeing a little bit of weather premium built back into these markets. This is an election year, and you look back at all the election years, you always see a little bit of a push in the markets for uncertainty, because markets don't like uncertainty. So I would expect that we'll see some of that come into play as well.
I do have a question on the crop insurance side. Do you think we can see some push to get these crop insurance prices a bit higher before March 1?
I do. I think that we will start to see a little bit more of a market movement as far in February for the grains. Like I said, we've got the funds sitting at holding the second largest short position on record for themselves. At some point, they have to start taking profits on those trades. So, I kind of think that's the trifecta, is the fact that the funds are holding extremely large shorts, and they're going to look at wanting to take profits. You're going into our production season pretty soon. I mean, we're going to start planting corn in Texas in about a week to 10 days. So our plant 24 is right around the corner. And I think that'll start bringing in some premium back into the market for uncertainty, for the lack of a better word. And then with the fact that we've got an election year, which always see markets improve a little bit, I think all that will help.
Doesn't look like we have any other questions, but thank you for attending tonight. If you missed some of it, we're going to post this online tomorrow.
All right. Thanks, guys. Now, if I can only